Hello, everybody. Hey, Ashley on Instagram. So we are live on LinkedIn, YouTube, X, and Instagram, but Facebook is not working. That just seems to be an error. I'm going to try that one more time, see if we can go live on Facebook. And as we're waiting for Facebook to join and for people to come into the live stream, welcome everybody. So I didn't do a show last week or a couple of weeks before that, but last week in particular, this is where all my technical problems start coming in. So that's not going to work on Facebook. Let's just turn that off so I'm not distracted anymore. Sound is good on Instagram. Thanks for that. I was in court last Friday, so I couldn't do this live stream. And court's interesting. Have you had the opportunity? Have you in the last couple of years to be able to attend court? I know most people would fear that, so they would not see that as an opportunity. But for me, it is. It's interesting because you no longer have to travel to court. You don't have to go into a courthouse and into the courtroom. You don't have to be intimidated or energized, whatever the case may be, from the architecture and the seriousness and the gravitas of the entire atmosphere. That doesn't happen anymore. You don't get to be dragged back into chambers like they used to do with me with certain judges who have now retired. So even though I wasn't a lawyer, I was asked to come in and sort things out and give some information to help the court out. None of that happens anymore. It's like a Zoom-like, it's not called Zoom, and it's not the Zoom platform, but it's a Zoom-like attendance. And so there's a bunch of people on like a picture, a Zoom screen with a bunch of people on it. Most of them have their cameras off. So who knows? Like, I like my camera on. I think that's appropriate. Certainly when you're talking, you should have your camera on, but there's all sorts of people. Most people have their camera off, and it's just a whole different experience. And people just unmute and start chiming in on on the proceedings. Hey, Your Honor, I want to talk about this, or Justice, I want to talk about this, that, the other thing. It's like you got some guy in the back of the courtroom in the old days who every time the lawyer says something would jump up and start chiming in. That would never happen. But that seems to be a little bit of how these online court hearings goes. But at the end of the day, it seems to work. I don't have to travel. I mean, not just me, all the participants, they don't have to travel, and it seems effective. It seems efficient. The judges seem really, really good at managing the flow and how the information comes at that. So there you go. It's all pretty cool. So I think we're good to go. We've given people time to jump into this. So let's get at it. Welcome everybody to a week in review, or a couple of weeks in review at Sinclair Range. My name is Scott Sinclair. I'm the owner and founder and president of Sinclair Range. And the mission here on this show is to give you some insight into what's going on at Sinclair Range. It's your window. It's your window into the real world of deals, decisions, day-to-day business adventures. And we will cover, in some form or the other, the usual segments: lessons learned of the week, interesting file or deal of the week, struggles of the week, and my personal musings. Now, I talk to you on this show all the time. If you're a listener, you would know this about private credit. Private credit is a favorite topic of mine these days in 2025, and continuing even more so in 2026. The U.S. private credit market, just think non-bank financing for businesses. It's exceeded $1.7 trillion, and it is just exploding. It's gone up maybe tenfold in the last handful of years, and it's expected to explode another fivefold, I think, by 27, 28, somewhere in that range. Is a massive demand. You see, if you read the financial press in the U.S., private equity funds moving into private credit. Everybody's moving into the private credit space. And in Canada in particular, now Sinclair Range works in Canada, the U.S. We've worked in over 30 countries, predominantly Canada and the U.S. But in the Canadian marketplace, I've said this before, there is a huge hole in this high yield, distressed debt, private credit market. In other words, if you're a business, mid-market and smaller in particular, I'm not talking about larger cap companies, but mid-market and smaller, if you're a 10 million asset-based loan borrower, or 100 million asset-based loan borrower, there's a hole there, and you're not qualified at the bank for whatever reason. You're outgrowing your covenants at the bank, or you've had a misstep, or whatever the issue is. You need to go to the private credit markets, and in Canada, there's a hole. There's very limited private credit. I spoke to an individual yesterday who owns a fund, and I don't think I was giving them enough credit. So there does seem to be some capital available, but there's a big hole. I talk every day to business development people trying to sell this product or get this product, for their clients. Very, very difficult to place. So there's a huge demand. Well, interestingly, because we're talking about deals, Sinclair Range I think we issued it last Friday or on the weekend, but we issued out a introduction letter, what's called in the M&A industry or the financing industry, a teaser letter. We said that Sinclair Range is seeking capital for a new Canadian-focused high-yield private credit vehicle. We have an established client with 26 years of specialized experience in factoring and accounts receivable, and they've placed over $1 billion of capital deployed. The company is built on an experienced management team, really experienced management team, and a solid foundation, and is now looking to expand its capabilities and to fill this hole, this $1.5 billion hole in the Canadian marketplace. And so the core product, being the accounts receivable factoring, will now be expanded into asset-based lending, secured bridge loans, debtor in possession loans, these types of deals. And you've heard me talk about those sorts of deals, particularly debtor in possession loans, a lot on this show in the past. They're raising up to $100 million for this new capital pool. And they're doing it both retail, but also working institutionally to try to attract this capital. And I sent out this teaser letter for this $100 million deal, and the response has been phenomenal. It really, really blew me away. And so we are entering, I've already been in this week with some pretty interesting conversations, and maybe we'll be able to bring this home. So that's one deal we're working on. This week, another deal, I've announced this before, but I've been on the phone all week talking to prospective purchasers and investors. This is announced as on that teaser. A teaser, by the way, is like a one-page PDF file that you send out, and it gives enough information about the company to get somebody who would be interested in buying it or investing in it, enough information for them to come back and say, hey, Scott, I want to learn more about that particular deal. Then you sign a non-disclosure agreement and you go into the process. Well, this one is a going concern sale or financing transaction for Precision Machining Plastic Injection Mold Tooling Company in Ontario that services automotive, but also aerospace, importantly. And what happens in this industry, like this company in 2024, like every other company in its space, got into some financial distress with tariffs and the auto sector imploding, which it did. And they pivoted to aerospace like many of their peers did, and they've been really successful. Aerospace has been exploding. These guys are doing a terrific job. And at the same time, automotive is now coming back. And so they're really, really busy. And we're looking for investment, and we're trying to sell the business through this sort of process. So that is another deal that we are working on. You can find both of those teaser letters on the Sinclair Range website, sinclairrange.com. Ashley, I don't know if I think you're listening in. I don't know if we put the capital raise teaser letter on there, but we should. Hey, Alan, thanks for joining us on Instagram. And so that's what's going on in terms of new deals. Now, I want to talk about a lesson learned for the week, if you don't mind. Have I told you before about the Inner Circle Deals and Capital? Are you a member? Have you come to join this? You should. You should. Look at this is a community that meets every other Tuesday. So not this Tuesday coming up, but the week after, for 1 hour on a Zoom call. And if you join this as a a business owner, an entrepreneur, a founder, a capital provider. We have lots of intermediaries, investment banks, etc. on there in both the US and Canada. And the idea is that you can pitch your deal. Maybe you can meet a funding partner. You can definitely learn. It's more about education, but it's turned into people are actually doing deals on there, which is interesting. But it's about education. It's about community, learning from each other, discussing issues. So you don't have to just pitch, but pitching is definitely part of it. So it's a 1 hour meeting. And really the way it works is we end up with 3 15-minute segments, right? So there's 45 minutes, except some of them drag over and there's some other chit chat in between. So that's what we do. I try to book 3 segments for this 1 hour meeting. And the last 2 meetings have been 3 pitches back to back to back. Okay. So that's the way it's going. And some of these pitches I have found are fantastic. Some of them are fantastic, and some of them are embarrassing. They're embarrassing to the person doing the pitch. They're embarrassing to me. I don't know why I didn't scream them better. I just shouldn't have wasted people's time with this. We had a fellow a couple of meetings ago who started off his pitch by saying, "Oh, by the way, I should tell you that I'm meeting with my partners right after this meeting. Right after I pitch you, I'm going to meet with my partners and we're going to decide what our business is." I mean, he literally said that. He may not have said those words, but that's what he said. You know, this is a guy who's been pitching. I've been in 4 meetings with him for months preceding this, where he's trying to get $1 million of seed capital for his idea. He has a great CV, like a resume of success in startup companies. I mean, it just blew me away. Who starts like, I'm here pitching to you. I don't even know what my business is as I stand right now. And then what he did is he read, like literally read. He didn't look in the camera and say, "Hey, here's my deal. I'm doing this, that, and the other thing." Instead, he had his head down like this. I'm going to show you the top of my head. Had his head down like this, reading from an AI-generated script. How do I know it was an AI-generated script? Because he had a lot of words like fluff in there. No fluff in this deal. And he had a lot of weird analogies, like the industry is falling apart like an airplane crashing into a cliff. You know, not just one, multiple in this script that he's reading. It was bizarre. It's embarrassing. People were texting me after saying, "Hey, was that an AI? Like, what was with that guy? Was that just a script that he was reading from AI?" It was terrible. Here's the lesson for us business owners, business leaders. You need a 30-second pitch. You need a 3-minute pitch, and you need a 5-minute pitch. Now, don't get hung up on the times. If your 30 seconds is 45 seconds, the elevator pitch, no big deal. If it's 20 seconds, no big deal. If your 3 minutes is 2 minutes, no big deal. But think of it that way. That's the way I think of it anyways. 30 seconds, 3 minutes, and 5 minutes. And everybody who runs a business needs to be able to do that. Every single person, okay? So your 30-second pitch. "Hey, Scott, what do you do?" "Oh, I own Sinclair Range, and we help companies in transition." Those companies could be companies that are experiencing a period of high growth and need help to navigate that, or they could be companies in financial distress. They need a turnaround and they need some restructuring. We help these companies, and we define our success as creating or saving jobs and creating or saving shareholder value. That's it. 30 seconds. That's what we do. That's the elevator pitch. 3 sentences. I think it's interesting. I hope it's interesting. It's intended to entice you to say, "Oh, tell me more." Okay, there's your 30-second pitch. The 3-minute pitch is the exact same thing, but now you add on how. We help these companies as a consultant. We can be a consultant. As a purchaser, we could just buy them, or as a lender to those companies. And on the consulting side, the services include things like turnaround advisory, chief restructuring officer, interim executive. We do the distressed M&A and corporate finance work. We tell our clients, and we talk about ourselves like we are a rapid response SWAT team. We just parachute in to a difficult situation to effect change. And we do the related investment banking, which is unusual. So we do the deals as well. In other words, we create, execute, and finance the turnaround plan or the high growth plan. We target mid-market and smaller businesses, largely in Canada and the US, although we have worked in over 30 countries. There you go. There's your 3-minute pitch. You took the 30 seconds, you added the how and a little bit more context to how you execute. Now, what is you? So 30 seconds, 3 minutes, 5 minutes. How do you make this longer for 5 minutes? Add a story. You add a story to what you just said. Let me give you an example. We're working with a client right now, or we worked with a client recently, and here's what's happened. Here's what we encountered and how we fixed that problem. I'm not going to take you through that right now. You've heard many of our client stories in the past, but that's how you expand that pitch out. 30 seconds, something short, sweet, enticing that covers sort of the mission of what you're trying to do. Add to that to get to your 3 minutes. That's the how, and then add a story to that. That's your 5-minute pitch. Now, if you are coming on something like the Inner Circle, or you're doing a pitch for capital, and you have 10 minutes, which is what we give these people, plus a 5-minute Q&A period, but your pitch is 10 minutes. What you should not be doing is showing a 3-minute video where the technology may or may not work, or, just walking through a factual deck slide. That's not what you should be doing. What you should be doing is saying something like this. Hi, my name is Scott Sinclair, and I'm here to pitch Sinclair Range. We are raising $100 million in secured debt to fund acquisitions or distressed businesses. And I will describe more of that in a minute. But first, let me give you some context about Sinclair Range, and then jump into the 5-minute pitch, the combination of the 30, the 3-minute, and the 5-minute. Okay, so you're telling what the mission is, what problem you're trying to solve, then how you do it, and then an illustrative story. Okay, now you have people's attention. They understand because you said, hey, I'm trying to raise some money. They understand the context of that. There's nothing worse in a pitch than listening to somebody talk about their business when you have no idea why you are listening to them talk about their business. Okay, I'm trying to raise money, $100 million. Now, let me tell you a bit about Sinclair Range. Okay, and when you're done that part, you say, okay, so that's Sinclair Range. What we are doing now is we're raising $100 million. And we're doing it as follows. And then describe the structure. Is it debt? Is it equity? Give some general terms, some valuation, some coupon rates, whatever it is you're trying to raise. And when we raise this money, the use of proceeds will be to buy and invest in distressed assets. We have a fabulous management team to do this. And here are some bios related to that management team. And this management team generates outsized returns with limited risk. How? How do they do that? They do it with knowledge arbitrage. This is a unique business. You have to know what you're doing. And if you are experienced in this, both on the investing and the turnaround side, you can create returns with limited risk just because you know more and you're quicker than the other people. The exit for this deal are as follows. And then in that section, you would talk about your payback, your proposed return on investment. Okay. And so what have you done for your 10 minutes? I didn't even have to have a PowerPoint, and it was relatively interesting. You did your 30 seconds, you did an introduction, you did your 30 seconds, your 3-minute, your 5-minute pitches, and then you talked about the deal itself for another 5 minutes. That's your 10 minutes. So when you talk about the deal itself, as I've told you many times, you want to talk about how do I get into, as an investor, I want to know how I get in the deal. Are you trying to sell me equity? Are you trying to sell me debt? What are the terms of these things? How do I get out of the deal? If it's equity, how are you going to get me my equity value back 3 years from now or 5 years from now or whatever your plan is? Are you going to sell the whole business? Or are you going to do a refi to pay me out? Like, how does that work? And what happens in between? How do I get in? How do I get out? What happens in between? And the what happens in between part is management, it's internal controls, if it's debt, is it secured, that sort of stuff. Okay, that's how you structure a pitch. And I'm going to hammer that home on the Inner Circle next time. But I thought I would raise it here for you. All right, comments, anything I need to respond to at the moment? Instagram, we're all good. Let's move into our next section. So we have had someone associated with our firm on what we call a professional services contract. Basically, this person is not an employee. We provide them a service. So often in the wealth management industry would be an example. you go to work at a wealth management firm as a registered advisor or whatever you are, technically you're running your own business and you're hanging up your shingle with the wealth management firm. And that's what this person and other people have done at Sinclair Range. So they're running their own business, and they have a contract with Sinclair Range. And Sinclair Range provides them things like a title, branding, Sinclair Range branding, access to office space, analysts, back office, support time, that sort of stuff. And this is sort of a common model. But the point being, they're not an employee. They run their own business under the Sinclair Range banner, and they pay a split to the house, which in this case is Sinclair Range. Now, obviously, in that sort of contract, there's pretty specific language and important language to protect the brand, the Sinclair Range brand, to protect the clients, the Sinclair Range clients. Even though that contractor is operating that client, you don't want that person going rogue, doing bad things, acting unethically, or whatever. Okay, so there's strong language to that effect. And so 2 weeks ago, yesterday, I was sitting over here in this chair with my glass of scotch in the evening, and I'm reading through some court submission filings for a court hearing coming up, which was last Friday. And it was, and it's a client, a Sinclair Range client. So I'm reading through this, and I have another client, Sinclair Range has another client who's actually a lender on that same deal. So we have two clients involved here. And I'm reading this, and stuck on page like whatever, 37, like deep in this, it says change in CRO, Chief Restructuring Officer. And in there it says they want the court approval to terminate Sinclair Range's contract and to hire this guy directly in the same position for the same money. In other words, he's cutting out Sinclair Range. Now, that would not be so interesting if I hadn't just read it in the court filings. I mean, all these contracts, this person can terminate their contract just on a friendly basis for whatever reason with 30 days notice. Like, that's all good. I wouldn't care about that. Except there was not even a discussion about this happening. I'm sitting here reading in this very office, reading it in a court filing 2 weeks ago, Thursday night. So obviously, that's a significant breach of the contract we have Sinclair Range. And I would say I wouldn't really care so much about that whole thing, except they needed more money as well for this court hearing, because the initial money they borrowed from a Sinclair Range client was coming to the natural end of its use of proceeds. So now they need some more money. Everybody expected that. And this same guy had asked me about a week before to go back to the same lender for another $2 million when he knew damn well that they might do that. But the total expectation is that Sinclair Range is involved in the deal, which is just a complete lie to me, because he knew damn well Sinclair Range would not be involved in the deal, but failed to disclose it. This, in my opinion, is why I ended up reading this in a court filing, and he never talked to me about it because he didn't want to crater the chance of the financing. So obviously, all of this is cause for immediate termination. And by the way, I never went back to the lender who was a client of Sinclair Range, because I could just smell this whole thing was fishy. So I didn't want to talk to them about it. I just thought I'd sit and see what happens. So what happens is this hostile takeover. He tried to get rid of us as CRO. And there was another $2 million of financing provided by a third party, which is great, by the way, from both the client's perspective, the borrower's perspective, and the initial lender's perspective. It's good. Somebody else is putting in more money. It goes behind the initial lender. Everybody's happy. So that's all good. So I'm reading this. It's cause for termination. So I terminate him that night. That's, as I said, 2 weeks ago, yesterday. So then Friday I wake up. Now, don't forget, the court filings have already gone in. Friday I wake up. I start working on this some more and making sure that we've secured access on all the things that you have to do when you unfortunately terminate somebody. And what I learned is that this person has now decided he's not going to fulfill his duties as Chief Restructuring Officer for whatever reason. Court-appointed Chief Restructuring Officer which was not in any way, in my opinion, tied to the professional services contract. So he's just like, I'm not going to do this work anymore. And also, I learned separately that the $2 million fell apart, or maybe it never existed. I don't know. I wasn't involved in that. But what I do know is I had a client that 2 Fridays ago was going to be in court in a week, and it had no CRO and it had no cash. Not a good situation. And so I start working on this for them. And by Sunday evening, I got credit approval for $1.5 million in new cash from another client that's a lender. We got a new CRO who I think is better suited anyways for the job. And the lawyers did a fantastic job Monday, Tuesday, sort of resubmitting all the application to court. And I missed this show last week because I was in court listening to this and getting the approvals for all of this, which we did successfully. I just think this was a huge save for the client. It's an unfortunate situation that should not have happened if people were being upfront. And well, I'm not gonna accuse words. By the way, I'm telling you this because it's all public information. You can go look at the court hearing and you get every detail of what I just said. So I'm not telling you anything that's not public, but I will refrain from my what I might call negative judgments about this whole thing. How are we doing on comments? We're all good. All right, let's move on. Now, you know, I produce content, obviously, for entrepreneurs, founders, owner managers, students, etc. And a lot of that sort of content, this is a Sinclair Range week in review, but I also have a site, thescottsinclair.com, which you should go check out. And the content in there is framed around the brand of the winning momentum, whatever content. And so in there, you'll see a Pathway to Profit Academy, so a business course. You'll see some free online videos that you can look at. You can read through things. And so it's hopefully a great website for you and a great resource. And the intent of the whole thescottsinclair.com brand is to raise business capital and to earn more profit. Raise capital, earn more profit. I think of the content, the winning momentum methodology, as a three-legged stool. So what does that mean? Well, one is business skills. How to, like, for example, understanding cash flow, working capital cycles, understanding how to go attract capital, how to pitch, like we just did earlier today, focusing to earn profit on increasing your margin first, reducing your overhead second, growing your top line third, and like in that order. Okay, so those are type of business skills that are part of the content, part of the methodology that I try to work with. And then there's leadership skills. So business skills, leadership skills, how to be a better manager, how to lead, how to manufacture winning momentum, get employees excited, empower employees, right? So leadership skills. And the third leg to that stool is skills improvement, self-improvement. And the idea on that is probably the area I'm least comfortable with, a little inside baseball. But the idea on that is that you can't separate the individual from the business. So many times in my career, I've seen great businesses and they should be a success, but the leader, the owner manager, the entrepreneur just can't get out of their own way at a personal level, And so you need to self-improve all the time because you can't separate those two things. So on the self-improvement side of the content, I don't talk a lot about, maybe I should, but I don't talk a lot about confidence or imposter syndrome or those sorts of things. Maybe I'll get there someday, but that hasn't been the core of my content. But I talk a lot about the power of positivity, the evils of negative thinking, fear, all these sorts of things. So it's kind of around a similar concept. Anyways, my musing, I gotta get to my musing here, is it really hit me this week that even I, the guy who talks about this stuff, I chronically underestimate the potential of my brand. And I can't give you a specific example of that, but one really hit me hard this week. And it's funny because it's not like I think, oh, I should be doing this, or somebody else says, hey, Scott, you should be doing this. And I think to myself, I can't do that. I'm not capable. I'm not the right person. I'm insecure. I don't have any of those problems. I don't have those problems at all. The problem I have, if it's a problem, is I don't even think about that thing. I don't think that I can't do it. I literally don't think about it at all. It never occurred to me that I ought to be doing that. Even though I'm telling other people, clients, to be doing that at the exact same time. But I'm not thinking about it for myself. Like, what is up with that? Does that happen to you? I don't know. I don't know what the answer is, but it's not good. And I need to fix that. I think it's holding me personally back on that third leg of my stool. Thought I'd raise it with you. Maybe you have some comments for me. Anybody else on here want to talk about anything? No, I think we're good. This felt good. I had to get this out of the way. It's been too long since I've come to join you. I'm right on time. This has been a week in review. Thank you for listening. Thanks for the kind words for people that reach out to me. We help. You heard the pitch. You heard the Sinclair Range pitch. We help businesses in transitions. You have a deal to do. You need some help. Reach out in the notes. Give me a call. Whatever. Let us know. We can help you. Thanks for listening.